Must be more fortune already. All right. Good afternoon, YouTube. Thank you for joining us. I'm Chris Pollock. This is the Educate Trade live stream. We do this every day, twice a day, actually, morning through the European Open, and again this time for the US Open. That time is going to be a little bit different next week. It's going to be 1:30 while the UK changes their clocks and the US don't do theirs, but a week later they'll catch up and we'll be back to the usual time of 20 kickoff. So what have we got kicking off the market today? There is some data out. Maybe we should start there because this is kind of, let's do these a little bit more chronologically than in terms of importance. We have 245 manufacturing and services PMIs coming out. So this, I'm always reluctant to trade if there's big data, on the open, if there's big data out at 3. So the fact that big data out or reasonable sized data out at 245 to me means this is not an open to be hitting with any size. You're gonna give yourself a very small window of opportunity to get into and out of that trade at favorable levels. Trading is tough enough without putting any time restrictions on it. Therefore, yeah, I'm gonna wait for things to settle down to after 245. Probably be patient, wait for the 3 o'clock time prints. We'll see what the market give forward. We are seeing stocks have a pretty good day. Indices have been pretty tasty. I do have a little area here which I am interested in. We'll see if we get there. I'm ideally not going to see a trade here before 245. We'll see. But yeah, US stocks have kind of left off where they picked up where they left off yesterday. Decent day yesterday. If we have a look, I mean, it doesn't look like a great one if you look at the daily chart here on the S&Ps. Looks like a down day, but from 2:30 yesterday, the market was strong. We had a pretty good open. I mentioned this earlier. Well, we initially ran the lows in the first 10 minutes, and then by 2:45, Bill Ackman's tweet about getting out of his shorts on bonds really got the market going, and the bond market itself. This has left us, way off the floor from where we were yesterday, and we're not too far, or at least challenging close to those highs of yesterday again today, but yeah, just tagged into those value area highs for the week, and maybe looking at the one down here for some weakness as a potential entry. But yeah, these stocks, we are approaching Q4, and there's a lot going on, but perhaps there'll be a little bit more in the PMIs that will maybe help us kind of guide ourselves through this. There certainly was in Germany, right? These services PMIs are pretty important. If you look at the UK ones, they were basically in line with expectations. But in Germany, they were very weak. And if you look at the previous two, we had 2 other sub 50 prints. This indicates economic contraction, or a better word for it is recession. 3 consecutive quarters of negative PMIs. Maybe we'll see a negative or negative month, should I say, of PMIs might result in a negative quarter on the GDP. We shall see. We've got US GDPs out actually later in the week, so interesting to see what happens there. But their PMIs haven't been quite as bleak. Everything above 50, which is kind of the 0 line on these PMIs, but on this occasion they are expecting it to be slightly lower than expected. I think the average beat on this has been about 1.35 or so. Therefore, yeah, you'd be looking at something maybe north of 51.2, 51.3, or yeah, on the other side of that, if you are looking for this to be a little bit softer, anything kind of sub 48.7 or so might be the sort of range where I'd be interested. But yeah, remember that services PMIs trump manufacturing PMIs. Having said that, I wouldn't be trading this if flash services are strong and these are weak, or vice versa, because you don't want your markets to be pulling yourself, or the data to be pulling your markets in 2 different directions. As much as I do believe that this is more important, I don't want anything out there at the same time which people can lean on to make that trade tricky. So yeah, that's 245. Then we've got let's maybe have a look at what happened with the German services, I should say, on the euro, right? This isn't great figures, and you probably expect some pretty ugly price action out of the euro. Well, you got it. Here we are. Let's have a couple of a little bit clearer. But yeah, there's an initial sell-off through A30, and we've got very, very little in the way of counter rallies yet. It'll look higher, but there's still gone down. So have a look at another low. And even if you were buying, shorting this after 5 minutes, you'd currently still be up over 50 ticks. So pretty nice price action on the euro because of those weak PMIs on the services sector. Interesting to see what happens with the US equivalent at 245. One thing that has led to, that weak euro has actually led to, as you would expect, a pretty strong dollar, right? The dollar index has been strong since that 830 print because the euro represents about 57% of the dollar index. So it makes sense that you'd see this stronger if the euro was going to be weaker. But normally the correlations are if the dollar's strong, stocks should be down, right? But as we've already established, stocks are up today and up across the European stocks, albeit not much too. So yeah, just bear that in mind. The move is very much a euro move, so maybe don't lean on the dollar correlation perhaps as much as maybe had done previously. You might want to look elsewhere for correlations today. I've got an eye on the VIX. Ideally looking for longs in stocks today on my view post OPEX. But I need some confirmations before I start taking chances like that. And if the PMIs are going to get in the way of it, then yeah, it's wise to listen. For the VIX, let's take a look at the volatility index. This is based on option pricing, how volatile the US P500 market is. Take a look at the daily on this. You'll see, I've got this little alert here to see if we can get through a daily swing low on the VIX. We've had a quite, haven't been above 20 for a little while, right? We're looking back into this range back in May. So things have been a little bit more hairy than we've seen recently, which is why we had that big selling in stocks. But that turnaround yesterday on the VIX obviously correlated to that turnaround in stocks. And the VIX is lower today, stocks higher today. Inverse correlation between VIX and stocks is about as clear as it gets. So if we do get a breakdown through here, then perhaps this might lead to that another wash higher up in stock. And we'll see what happens with the indices as we approach the open. But yeah, probably won't sit with you for too long on the open today because we don't really want to be encouraging too much slinging around at 2:30, given the data that's coming out just 15 minutes later. Other markets in focus, Bitcoin. We had ETF news through yesterday. It took a little while for it to get going, but boy, did it in the end. We're up 4.5%, 4 a bit percent so far today, and nothing compared to what we saw around the close of yesterday. So yeah, pretty interesting action on Bitcoin of late. We haven't seen it up towards these levels for a little while either. And Bitcoin is a bit of a leading indicator in many ways for economic growth, well, for sentiment really, because you don't want to be buying Bitcoin if you think there's going to be a liquidity crisis or something, right? That's going to be one of the first things that gets checked out. Given that from yesterday and now today, another positive one, we're seeing this good grind higher. This is potentially a sign of optimism, but yeah, this is a little bit more news driven than that. But generally, if you see Bitcoin doing well, that probably will filter through into your other risk assets like the stock markets and certain commodity markets, oil, all things being equal on the supply side. Speaking of commodity markets, where are we with gold? We are seeing a down day on gold. Yesterday, a lower low, and today, a lower low. We haven't seen a single lower low in terms of consecutive days throughout this rally that we've had on the geopolitical issues in the Middle East. And yesterday, a lower low for Monday from Friday, and similar here on Tuesday. So this might actually be creating a little bit of an opportunity for longs who are looking to snare them. That's something that the office has done pretty well on gold last couple of weeks, I'd say. And we've literally just gone down and sat on close to that point of control for the year. So yeah, it wouldn't be a surprise to see this trade up towards that value high. We're looking what now, $40, $42 higher than this. Want to wait for price actually confirm it, but I think there's not a window of opportunity for gold to do fairly well. That'll be one I'm watching. So where are we on these stocks? I know we talking about the S&P and the Nasdaq. We mentioned this morning. We ran the lows, long-term lows here on the S&P, and Nasdaq saw triple bottoms, pretty much 1, 2, 3 of them taken out yesterday before spinning around and pushing up. You see, this is actually an up day yesterday on the Nasdaq, whereas you didn't get that on the S&P, nor did you get it on the Dow. The Dow was kind of the weaker of the three, as is often the case. But just have a little look at that low. But we are very much at the value low. So this is one of the reasons why I was keen on this market. Can easily trade these value areas, and that's a pretty hefty range if you're looking from 3,300 up the way to 3,445. So plenty of opportunity to capture if it does start to move. But we have earnings out later, so let's really watch the first minute of the open. Then we can talk about what's going on into the open or into the close later on. we look at the delta here, we're certainly seeing a little bit more buying than selling so far. A little bit of outsized divergent buying or imbalanced buying coming through on the S&P. You've seen, this has been the cumulative volume delta has been pretty high, or generally increasing throughout the day until the last half an hour. But yes, well, we're now starting to see this potentially turn negative. So there is some news on the squawk. Go and pick it up. But yeah, this S&P, as much as we're seeing sellers starting to come through, the price action is fairly clear. Dow even looking more aggressive, interestingly, having had that slightly weaker day yesterday than certainly the Nasdaq did. Let's talk about the earnings later. We have already seen some pretty nice earnings out earlier today. We had 3M was one that I traded. This one after getting long list that the market moved a nice 70 ticks or so before the open. But the big ones are later on today. How are they doing it these days? They're still doing the. Okay, so we're looking for. We want the after close if they can give it to us. I'm not sure they will. No. Okay, you'll have to take my word for it. We've got. I've got my own spreadsheet for this, so let's refer to that. The earnings calendar. We've got Microsoft and Google out after the close tonight. 9 o'clock for Google, 9:05 for Microsoft. These are huge components of their respective indices. So if you want to put it in perspective, the Nasdaq is Microsoft's the second biggest company, rocking in at whopping 9.6%. Between the two Alphabet shares, you're looking at north of 6%. So you're north of 15-16% worth of the Nasdaq reporting within a 5-minute period tonight. No doubt there's going to be volatility after 9 o'clock. It often means the move into 9 o'clock, that last 10 minutes is pretty linear. So that's something that arguably might be a little bit easier to trade on the market on close. But yeah, that's probably where I'll be looking. But yeah, my goodness, seeing some decent divergence between Nasdaq and the open here, and Dow punishing those short on that open. That's a pretty aggressive start to the day, up 100 ticks, almost. Probably will be by the time I finish this sentence. In the first 2.5 minutes or so. Maybe there is a trade in there before the first bit of data that comes out in 15 minutes. But that's probably not one for me. I think watching the VIX for that low to go, see if that's going to confirm longs, or ideally trying to buy on a little bit of weakness if we do get some away. I'll leave it with you for today. Be careful with the earnings. These things, as much as they're due out at specific times, 9 o'clock and 9:05. Last time, Microsoft was out at 9:02 and Google was out at 9:02 and 45 seconds. They do very little time to trade them individually. You were trading them basically coin tossing by the time the second one came out. And when they're expected this close together, there's always that risk. So trade carefully tonight. If you're trading the earnings, it can be a face risk. Right, going to leave it with you, and have a good trading day. Plenty going on. So good luck at 2:45, and see what you want to do with the earnings.